Thanks for joining. We're just like 3-4 minutes into the meeting. It's a Sunday morning. Thanks everyone joining. I know if you are showing up here, that means you are really, really interested in these topics. We have like two awesome, great speakers here, and Rosalind, and then Whitney Bunite. Sorry if I'm calling it wrong, but
good enough.
Okay, that's great. Both of them are from First Business Bank. They are vice president. Whitney represents SBA lending, and then whereas Anne represents accounts receivable financing. There have been, I would say, at least 2 or 3 requests in the last 2-3 months from multiple entrepreneurs, those who are both IT consulting companies as well as non-IT people, that they are like extremely interested in understanding this more deeper into lending and then account receivables. So when I wanted like some speakers, Om Garu did suggest these two names, and Anne was like super interested in, and then immediately said yes, and she wanted to like help us. And within the team, she said like Whitney is the expert in SBA lending side, so she helped coordinating and then get the stuff in. Both of them are like industry veterans. They have like lot of experience, and I'm actually really excited to welcome them on behalf of Atmiya. And then like we can get started from there. Okay, I'm going to share screen. Whitney, first yours, and then we'll go from there.
Perfect. So I'll just briefly introduce myself. I've been with First Business Bank for 9 months now, I would say, but I am not new to SBA lending. I have been doing it for almost 15 years now. I started my career in public accounting, actually, and then kind of happened into banking because a new bank was starting called Live Oak Bank, which I'm sure a lot of you have heard of. They're very active in the SBA space. So I started my career there, and I was one of the first 20-something employees. Learned a lot about SBA lending, and then from there kind of pivoted to open up so I could lend to more industries, because as you know, Live Oak is very industry focused. So First Business Bank allows me to lend across all industries. There's really not any kind of hard stops that we have. We're open to virtually any industry. So with that said, I don't know if we have the slides up, but I can kind of go from there. Again, I've been doing this long enough that I can go with it. So what I primarily do is SBA 7A lending. That you've probably heard of SBA loans. What is important to know is that we and all other banks, we are lending our own dollars. We are keeping it on our balance sheet. We are servicing the loan. We just simply adhere to the SBA 7A program rules. We are a preferred lender. And what that means is that we make all in-house approvals. We have been selected by the SBA to be able to do that. Not all lenders are preferred or what's called a PLP lender. So that's important and something that you should be asking if you are, out there in the market and talking to different lenders. Any bank can do an SBA loan, but they may be what's called a general processing bank or institution, and they have to take every single loan to the SBA for individual approval. And that can slow down the process time quite significantly. So we are a preferred lender, and we lend our own dollars as any other bank does when doing an SBA 7A loan. Sort of the benefits of an SBA loan. The tagline of SBA is that it's for those who cannot obtain credit elsewhere. And that is for a myriad of reasons. Basically, maybe you don't have collateral, maybe you don't have a ton of cash to inject into the project. And the SBA kind of helps with those terms. I'm on the benefits, the next slide. I don't know if I have access to switch. There we go. So first point, flexible equity contributions. We have up to 100% financing. Another term you might hear thrown out is 100% LTV. What that means is if you are an existing business owner, and you're buying real estate, or maybe you're trying to acquire another business, we have the ability to do 100% financing where you might not have to inject anything into the project, to help you keep what cash you do have on hand, and able to use to fund your expenses and not trying to obtain more capital. SBA loans are not required to be fully secured. Now, what that means is if you don't have collateral in hard real estate, investment properties, your personal residence, it doesn't count against you. It doesn't mean you cannot obtain an SBA loan, but the SBA requires us to take all available collateral. So if you do have equity in your personal residence, or you do have investment property that you own 100% between you and a spouse or partner, then it's required to be pledged as collateral on any SBA 7(a) loan. We have the ability to do much longer terms than conventional lenders can do. Typically, conventional loans are structured with a balloon or demand at the end, and they might be amortized over 25 years, but due after 5 or 7 years. The SBA allows us on commercial real estate to stretch that term out over 25 years. So if you are relocating and trying to buy a building for your business, or you want to do ground up construction on your existing business, or a startup, say like a daycare franchise, we can do that over 25 years. And I think, we'll get to this a little later, but if real estate is the largest use of proceeds in that loan, we can still do 25 years. And what I mean by that is under the 7(a) umbrella, we can finance, inventory, working capital. And as long as real estate is the largest use in that loan, we can do 25 years. All other uses, so just to buy business assets, maybe just to refinance business loan debt that you might have originally taken out, it's a 10-year loan. Loans 15 years less and less do not have a prepayment penalty. Loans above 15 years only have a prepayment penalty for the first 3 years. After that, you can pay it off at any time, and there's no penalty to do so. So it's a really good starting loan product for someone who is trying to just start a business with low capital, low collateral. It allows you to get in the door. And then once things are going really well in a few years, you can refinance it, and there's really no penalty to do so. Lastly, as I have already mentioned, it's a really good startup business opportunity. We offer, or are able to offer, flexible ramp up periods for a startup where we will build in, say, 6 months of interest only payments, and those payments are self-funding in the loan. So you won't have a payment for the first 6 months to allow you to ramp up, start making money and able to pay your expenses, and then start paying back the loan. So there are benefits of SBA loans, and are really there for you when you can't obtain conventional financing. Next slide. So kind of already touched on this too, but eligible uses of 7(a) proceeds, business acquisitions, partner buyouts, owner occupied real estate purchases. You're already an existing business and you're just trying to buy your real estate. We can look at debt refinances, We're really big and really active in franchise financing and try to be as competitive as possible in that regard. We also do startup businesses and construction tenant improvements. What's not on here and is new to SBA 7A is that we can actually do partial buy-ins now. So if you are already part of a business, maybe you're a manager and the owner wants to take some chips off the table, but maybe doesn't want to walk away entirely, you can buy 95% of the business. They can still stay on, retain their 5% ownership. They do not have to guarantee the loan, and it's eligible. And that is brand new to what we're allowed to do. It just changed in August of last year. So that's huge, and will open up a lot more doors for you out there. Next slide. Target industries. Now, we do have this list, and it mainly is comprised of professionals, dental, medical, engineers. We love franchises, as I mentioned, but this is not a comprehensive list. I finance restaurants all the time, not franchise owned, or not part of a franchise or a licensor agreement. So, this might be what we focus on and what we target, but it's not all encompassing in all we offer. We can go to the next one. I think I have some examples, some case studies of ones that we've financed. This is a ground up construction fast food franchise. It was mainly to purchase the land, construct the building, but in here we also financed equipment, furniture, fixtures. Working capital is huge in, obviously, startup. We try to give at least 3 months or more based on what your projections are showing. If you're showing a loss for a longer period of time and maybe you don't have a ton of capital on hand, we will build in more. So this total project was just under $4 million. Borrower injected 10%. And because, as I mentioned, the building construction and the land purchase are 25-year assets, we were able to do a 25-year amortization on this. And we also built in a 6-month construction period. As I mentioned, it's 6 months of interest only, and it's self-funding. So basically the loan is making the payment. And then after that 6-month period, it reamortizes and your payments are based on a 24.5-year amortization. Interest rate, this is important. I can talk on this now. For commercial real estate, we are always going to be prime plus 2%. On a business acquisition, where it's a 10-year term, we're always going to be P plus 2.75. And that's based on the Wall Street Journal prime rate, and it can readjust at the top of every quarter. So 4 times a year, if the prime rate comes up, comes down, your rate will adjust accordingly. As I mentioned, everything else is interest reserve. Those are all your benefits kind of outlined there. So we can go on to the next one. And this is the acquisition of a staffing company where it is, I can answer this question. I can stop and we can go on in a minute. The SBA guarantee fee, that is a good question. It is now for loans above $1 million. Anything under $1 million, there is no SBA guarantee fee. So that is new also as of August of 2023. Loans above $1 million, it's a tiered structure, and it works out to be between 2.5% and 3.5% of the total loan amount. It is amortized into the loan itself, as are all closing costs. So it's different from a home mortgage where you have to pay 10% as the down payment, and you also have to come up with $10,000 in closing costs. The closing costs are worked into the loan, paid at closing, and amortized over the life of the loan. The SBA guarantee fee does not come to us. It goes directly to the SBA. It is their fee. It's their cost of having a government-backed loan. It covers their expenses when a loan goes in default and helps them cover, 75% of the loan amount that we're sort of out. A good question. We can go on to the next one now. This was a business acquisition, only business assets, goodwill. There was no commercial real estate here. The borrower injected, 10-15%. And the seller, in this case, we may have asked, or the borrower and the seller might have worked out a seller carry note. We do have the ability to work seller notes in as a down payment. So you can kind of split the difference with the seller if you want. And the only stipulation is that it's on standby for 2 years, and that can count as part of your equity contribution. As I stated, 10-year term, fully amortizing, meaning no balloon, no call, and there's no prepayment penalty on a loan like this. Our interest rate is prime plus 2.75. We also worked in a companion express line for this loan of $100,000, and we have the ability to do 5 years revolving, so 5 years that you can draw on it and 5 years that you have to pay it off, and that was at prime plus 3. So yeah, this allowed us to do both funding the business and funding working capital, so that you're not just buying the business and then what? You have capital in case you need it. And then I think the last one, this was the acquisition of an already existing daycare and the real estate. So the business acquisition piece was just over $1 million. The real estate was 2.7. We built in working cap of 200,000, and then closing costs and the guarantee fee were about 143. The total project was 4.1 million, and the borrower injected about 10%. And this is kind of harking back to, my original comments, where when the real estate is the largest use of proceeds in the loan, we have the ability to do that 25-year term. We included 6 months of interest only during that transition period. And the rate was prime plus 2.75 here. So this allowed the, probably the people that worked there to acquire the business, give them the longer term, lower payment, lower down payment, and include that working capital again to give them the ability to run the business after it closes. There's other points, and I realize these are the last of my slides, but other things to consider with an SBA loan are that we require life insurance on our loans, and it's typically the total amount. So in this case, we may have asked for 4.1 million in a life insurance policy. So that's also required on an SBA loan. I can't read that question. Let me see if I can open the chat here. I've missed quite a few questions, haven't I?
Yeah, I think that's fine, Whitney. I can also ask those questions towards the end of it.
Okay, let me see. So we touched on the guarantee fee. I think I answered that one. Let us know the process and documentation required for getting an SBA loan, which is a startup. So in a startup case, what we would need is your personal tax returns for 3 years. We require a personal financial statement to start out, your management resume, and a business plan and projections. That's what we need as far as pre-approval goes, which is my part of the process. We may have an initial call to go over the specifics. I will run the numbers, run it by my, sales manager and credit officer, get an idea of our appetite on something like that. And then if I get the go ahead, we would go forward with the pre-approval or term sheet, and then on to underwriting and closing to help you get that loan. Also would like to know if there are SBA loan agents who can help with the process and any. There are local SBA, like small business units in they're across the country. There's a business called SCORE that helps with projections and business planning. And then there's a whole host of contacts I have that assist with that as well. And as far as loan agents, yes, there are brokers that may help you with obtaining financing unless you find a business you want to buy with a loan broker and they're listing the business. I would not necessarily recommend that you go with a broker because they'll charge you a fee. All you really need is a bank and a contact at a bank that does SBA loans and that will assist. We act as, like, I will run the numbers on a business and give you my thoughts. If I think, basically the bank is looking at it, can the existing business that you're buying, can it support the debt service that you'd be taking out with an SBA loan? And if the answer is yes, then usually that's a green light. Now, if it doesn't, and it's close to not being able to make it, we'll have a discussion, like maybe it's a bit too high, maybe there's some negotiating room. Obviously, I'm not a broker or consultant, but that's, we will assist you with those sort of decisions. Let me see what the next question was. Who's eligible for SBA lending? Anybody that owns a business, or even doesn't own a business, but you would like to start one and you have 10%, you have experience in the space that you're looking to start or buy. Maybe you have previous ownership experience, but that's also not required. But management experience, you're used to overseeing personnel, you have managed budgets, you have experience in the space, but anyone is eligible for SBA lending. You do have to be a citizen of the US or a lawful permanent resident in order to obtain financing, or have a partner that's going to manage the business. I think the number is 51%. So it has to be at least 51% owned by a lawful permanent resident or US citizen. Typical requirements for startup with non-tangible assets or inventory. I mean, that's standard. Most SBA loans are not going to have a ton of collateral, and our collateral may be limited to, just the fixtures or just the blue sky. We might not have any at all. It has to be a good plan. You have to have space or experience in the space you're trying to start a business in. It may help that you have collateral to sort of back up, the lack of business assets. So maybe some personal real estate, or maybe more of a down payment, and to help kind of mitigate that risk of a startup and not having a ton of business assets. The minimum a buyer has to inject. So on any startups and any true acquisition, it's 10%. That's the minimum. As I stated before, if you're already an existing business and looking for to buy a second business or to buy commercial real estate, we have the ability then to do 100% financing. It's not, there's no PMI like a mortgage. As I stated, you don't owe the 10% plus the closing costs that we're asking for. It's strictly just 10%. That's it. Are there different terms for asset-based versus non-asset-based businesses? No, there are not different terms. It's 10 years goodwill only. That's it. We don't have lower terms. I wouldn't recommend you taking a lower term either, just because you might as well take that 10 years with the lower payment. And then if you pay it off early, great. You owe less interest, but 10 years is typical, 25 years for real estate. prime plus 2.75 is that standard. It may change lender to lender, but for the most part, prime plus 2.75 is pretty standard across the board because that's what the SBA recommends charging. So I would say 2.75 is pretty standard. Okay, let's keep going.
Yeah, there are many more questions. What
Oh, we
can
got a
also
lot.
do.
We got a
Yeah,
lot.
yeah.
Okay.
What we can do is, Whitney, you know,
Yeah.
I'll give you a little bit break. Maybe let Anne complete.
Sure. Yeah, because I'm probably taking up a lot of time. So yeah, and then everybody has my information too.
Right.
Maybe I could either reach out to me directly or send me these questions and I can maybe answer after the fact.
Yeah, I think let's see, you know, what happens after Anne's time.
Perfect.
And then we can like take the Q&A a little bit. And
Okay.
I'll, in the meanwhile, also I'll try to consolidate them into easier way so that, you know, I can ask you.
Sounds good. Okay, I'll be quiet now and let Anne go.
Cool. Yeah, no problem. Thank you though. Thanks. That's
Thank
a
you, guys.
pretty
Thank you.
solid session. Yeah. Okay, I'm gonna share now another
Okay, whenever you're ready, Hari, I'm ready.
Okay, just sharing presentation. Okay, let's see now. Okay, does it share?
Okay. Well, good morning, everyone. Thank you, Hari and Om, for inviting me and Whitney to present for First Business Bank. I've known Om for quite a while, so I'm very pleased and thankful that he gave us this opportunity. So a little bit about accounts receivable financing. I've been part of First Business Bank for going on to this year will be 6 years, working with Bill Elliott, who's the president of the division. Some people on here might know him if they belong to IT Serve. Factoring is a very good lending product for IT consultants and many businesses that mostly do not require inventory because we don't lend on the inventory. We can finance businesses that do have inventory, but it's much easier for if you don't need inventory financing, it's much quicker. So we also will work with other lenders who will do inventory on their own and partner with them. So we can go through the staffing IT consultant industry. Yes, so we've been doing staffing for many years. It's done by a lot of lenders, very quick and easy. It helps you with your payroll. Maybe you're not getting paid for 60 days. This way you get paid immediately as soon as you send us the invoice. And then we fund you generally 90%. We can go a little higher in staffing, but we lend 90% on the AR as soon as you sell us the invoice. You could go to the next slide. Let's see. This kind of gives you the steps of how payroll funding works. So it's really, once we receive the invoice, we'll give you 90 to 93% on that invoice. When we'll take out our fees for that when we collect from your customer. So we'll lend you that advance rate. Once we collect, we take out the fees. It goes into a reserve account, and you can withdraw from that reserve whenever you need that money. You can leave it in there as well and use it just as a bank account, but it goes to a reserve. Next slide, I guess. We already did this, but so as I said, factoring is great for IT consultants, medical, engineering, staffing, hospitality, government. We can do security guard services, manufacturing, food and beverage. We have a few food companies in our factoring portfolio, transportation, very big for factoring, but any business, with the exception of, we do not do construction and we do not do apparel. There are some lenders who do apparel and they specialize in that, but it's not something that we are comfortable with. You can go to the next slide. We are very competitive on the rates. We are part of the bank, so we are not borrowing from another bank. We will never really lose a deal on rates. We'll always be competitive if you're talking to someone else. Flexible on structure. If there's certain things that you need, we'll take a look at it. We're very flexible, especially in IT staffing. Very simple, streamlined application process. What we ask to see if your opportunity would be a fit for us. We ask for 3 things up front, which is your current AR aging, your name and address of your debtors, which are the companies you do business with, and your most recent financials. Also, if you are a staffing company or any other company that has a specific maybe MSA or some type of specific contract, we'd like to see that up front just to make sure it's something that we can lend against. So once we get that, we can get you a term sheet within 24 to 48 hours. And the process after that is pretty quickly as well. Once we do send you a term sheet and you accept it, we ask for a due diligence fee. Our due diligence fee is very low because we do not do any kind of field exams, etc. So it's just a fee that is charged that is a pass-through fee to check UCCs, different things like that. Whatever's not used goes back to you, the customer. If it costs us more than what we've asked for, we take it out of your first fundings. We have a big back office that you would be working with. Anybody who is a customer gets their own account exec, so they speak to that same person all the time. It's not a call center, so you get to know your account exec. They know you. They can work with you on maybe sometimes you're having a problem collecting from one of your customers, and they start to learn all about your customers and can help you with that. Next. Okay. So a little bit about the bank. We also have private wealth. We have asset-based lending, equipment finance, SBA. We do used car floor planning as well. And obviously we have my group factoring. Next. Okay, I think this is just some stuff on the bank. So, any questions? Did I miss anything? Let's see, any questions here. So
Okay,
on
so there are.
when you, yep, go ahead. Sorry.
Yeah, sorry. And there are like bunch of things. Let me just remove you as a spotlight so that Whitney also
Okay.
can come in. So there are definitely quite a few questions that came in, not only on here, but also to me. One sec. I'm just trying to make this work. Okay, so in the meantime, I think, Anne, why don't you give a little bit more background? There were like few questions around why First Bank, like why Anne and Whitney, why not like something else or somebody else? Why should they come to you to do the business? Why don't you give that a little bit?
Okay, sure. Well, the bank has been in business over 30 years, I'd say. We are listed on the stock exchange. We're a public company. Everything that we do, I feel, is, nothing is hidden. We're very transparent when we have to be. Our customer service is in our back office is very good. We have a great back office. That's what most of our customers deal with, our back office. You work with me in the beginning. I'm always there to help. throughout any process and as your customer, as long as you're a customer, but we have a very good back office. There were some questions on rates. For a bank, we are very competitive in our rate. Like I said, because we're not borrowing from someone else, but I can't give out rates here because we really look at every situation individually. So we do charge a factoring fee, and then while we're waiting to collect on the invoice, there's an interest. It's usually prime plus something, but it really depends on once we look at the package, your customers, etc. I did forget to say, and then I'll give Whitney a chance. Factoring is based on your customers, the strength of your customers. If you're a startup, we don't have a problem with that. We like startups, and we'll work with companies to over 100 million in revenue. The strength relies on who your customer is. So we look at their D&B and their history. If we need to, we'll buy credit insurance, etc. But the factoring is based on your customer. I hope I answered that, but if maybe Whitney wants to take a question, and then
I was gonna say, speaking solely to why First Business Bank's SBA group, everyone on our team has a ton of experience with SBA lending. We are very quick. I have been at 3 or 4 different SBA shops, and this is by far the quickest that I've seen. Everyone is very motivated to get loans in, get loans closed. There is a sense of urgency here that I have not seen elsewhere, and the ability to kind of change and adapt. And if, there's always going to be something that comes up during closing. The ability to make things work and make it fit in the box, I also haven't seen elsewhere. It's just a very technology focused bank, which allows us to also be very quick. Everything's electronic. We're working on, automating our application package. So it's very, state of the art, and we have a ton of experience in SBA.
That's awesome. Another extended question to that. See, the folks who joined here, they are like across the country. Not just in New Jersey, but quite a few in Texas, California, like everywhere. Can you guys talk about if they are from different states? How does it work with you guys? Is it pretty normal, or are you concentrated more on one place?
No, we're a national, our specialty finance groups. We are national, so we could do loans anywhere in the United States. Whitney, I don't know if there's different laws. So you want to maybe speak to that?
We're also nationwide. The only 2 states we aren't currently in are Alaska and Hawaii. Other than that, we work across the country, and our team is based across the country as well. We have a lot of people in California, a lot of people in North Carolina, in Florida, up and down the coast. And if I have somebody that's in California that needs, a call at 8:00 at night, my time, we make it work. So it's nationwide. It's everything's done electronically. You can have your own legal team wherever you are. They'll have mobile notary come, and you can sign from where you are. Everything's scanned and sent back. So it's really not a problem wherever you're located.
Awesome. Yeah. So I'm taking basic questions and then leveling up so that you guys can actually answer most complex later on. The another question is, so if I am a business owner today, before even I kind of apply, what are the essential documents or pre-work that you expect us to do so that we can move quicker? What should I be doing?
You want to go first, Anne?
Oh, is that for me or for, I didn't know if it was both of us or?
Yeah.
I think Whitney, that's for you.
Okay. So as far as what, is that what we need documentation wise?
Yes, from a documentation wise.
Okay, so it'll kind of differ based on the loan, but you know, if it's a startup, as I mentioned, we'll need a business plan, projections. Maybe if it's a franchise, we'll need the franchise disclosure document. We'll need your personal financials, which would be 3 years of your tax returns, and then also what we call a personal financial statement that lists your personal assets and liabilities, like cash on hand in the checking account, what your stocks and, you know, retirement looks like, what property you own, what your credit card debt is, what your mortgage payment is. So that gives us a good picture of what financially it's going to look like. The only thing that would differ is if you're buying a business, we also need their 3 years of their business returns to get an idea of, because in the SBA's case, we're really lending on the cash flow of the business that we're financing, because most often we don't have a ton of collateral. So we need to ensure that the business can support the debt that you're going to be taking on.
Got it. So
And
I
then-
do have like.
Sorry, I was going to say there's a lot more documentation that is needed throughout the process.
Okay.
To start and get an answer, that's what you need. Sorry to interrupt.
Yeah, no, awesome. I was actually, getting a little bit there. The actual questions that came in was, credit worthiness, ability to repay, collateral, the business purpose and things like that. So are all these like required, like, let's pick one example of this credit worthiness. Do you need, borrowers, like all partners credit worthiness score, or is it like just a company owner?
Okay.
Partner, like what do you
That's a good
validate?
question. I answered this in the chat somewhere where someone said, is it a non-recourse loan? No. Anyone that has 20% ownership in the business or will have 20% ownership has to be a personal guarantor. So not only is the business signed on, but you are also responsible personally.
I see. Awesome. How about ability to repay?
So
Like-
yeah, so what the decision is based on is going to be, as I just mentioned, the cash flow of the business. So their profitability and whether or not it can repay the loan. If we see trends maybe in the business, like declining revenues, declining profitability, we're going to ask those questions. As far as from a personal perspective, we have no minimum personal credit score that we're looking for, because it can fluctuate, based on what your balance is like in relation to your limit. And if you don't have a ton of credit history, that also can lower your score. So mainly, I mean, and then further than that, we've also done, where someone's had a bankruptcy 10 or 15 years ago. So we kind of, there's no hard and fast rule as to what your minimum credit score needs to be. So it's open. As long as it's explainable.
I see. So I do have like a follow-up question on that, Whitney. So if I'm a business owner and I have multiple businesses that I'm running on, can I, use my other business to, while I take the, the SBA loan for, like, say, one business for my startup, and use my other business cash flow as a, collateral or whatever?
Yeah. We're going to look at that too. And
Okay.
And like I said, if I don't want to get too in the like weeds of SBA eligibility and all that, but if the businesses, your existing and the one you're trying to start are in the same industry, we can do 100% financing. So what we typically do is your existing business and your new business would be co-borrowers on the loan. We can't do that if they're separate partners in both businesses, but we're at the very least, we're going to ask for those financials on your business so we can make sure that that's not going to be a drain on the business we're financing, if that makes sense.
Awesome. Yeah, awesome. And one last within that eligibility is the management expertise. How do you guys evaluate management expertise within that company?
what's your, it's going to be different. I'm hesitating to answer because if you're, say you've never worked in a, okay, I'll just say I'm a Cold Stone owner. I'm a franchise owner too. I have no experience in restaurants or ice cream. Okay. I had no experience, but I had experience in SBA lending, in the finance side. So that translates, to that business. And also if there's a franchise to, that's invested in the success of the business, you maybe don't have to have as much direct industry management experience as if it was an independent pharmacy, say. We're just, if that's the case, if it's an independent business, an independent restaurant, no license, no franchise, we want to see that you've managed a restaurant before, or you've owned one before, or maybe your family did and you worked in it as a kid and grew up in the space. So, there's many different aspects to that. And that's kind of why I'm hesitating to answer, not trying to avoid. I just,
Sure.
there's different ways to look at it.
Yeah, sure. Essentially what you're saying is, Whitney, depending on type of the business, there can be some leeway, room around like how we evaluate.
Mhm.
But essentially, if the more technical complexities involved, the better management experience is what you seek. For not
Exactly.
traditional, probably,
Exactly.
you're okay. Cool.
Mhm.
Awesome. I'll move on to the next, category. This is more of like the tenure and then the type of interest rates that vary with the lending. So the question here is, generally, like how somebody decides whether it's a 5 years, 10 years, 15 years, how do they pick up these loan terms? Is it like business owner specific, or is it like
It's
the
not.
person who is up? Okay.
Okay, it's not, I'm sorry. It's not industry specific. It's really just depending on what you're seeking financing for. So if it's just inventory, working capital or cash, furnitures, fixtures, and equipment, and then like the goodwill of the business, the blue sky, the intangible asset, that's all going to be a 10-year loan. The only thing we're allowed to do 25-year terms on is real estate or construction. That's it. Either buying an existing building or purchasing land and constructing. That's the only time we can do a 25-year term. Or if, like I mentioned, if there's a blend between the two, if you're buying a business and a building, and the building is, 3 million and the business is 1 million, then we have the ability to do a 25-year term. But only in those cases.
Awesome. In similar line, is there a loan amount? I think, is it like 500K or something below is what can be on the expedite process?
But the max is?
Yeah.
So the max any one guarantor can obtain on a 75% guarantee is $5 million.
5 million. Okay.
Yeah.
And how long does that take for, to, is the time, say, if it's a 5 million versus 500K, how does the express delivery thing work? Is it like the money based on the money it changes, or the loan amount it changes?
Okay. So the time period is like how fast. So we do have, the SBA does have an express program, and we are kind of test running it now. But loans under 500,000 are eligible for an express loan. And so that's a much shorter period of time. You could be looking at 30 to 45 days.
I see.
However, if it's above that, if it's a business acquisition and it's $5 million and there's no real estate, it's going to be fairly quick. But when the timeline is elongated is when it's a big construction project, and it's not just the bank and the buyer, it's a contractor, it's appraisals. There's a lot of third parties involved that we have to manage, and that can that can elongate the timeline.
Awesome. And how about like, if any of these companies involve in this international, working programs, does that matter? They are US based, but they do have like, operations running in India and elsewhere.
Okay. No, I mean, there is, the only thing I can think of, as long as it's US based and our buyers or owners are, as I mentioned, lawful permanent residents or US citizens, there's no problem. And there is a special export loan that allows us to get 90% guarantee from the SBA. So we're more apt to lend to maybe a more volatile industry if you're exporting. And there's really no rule as to how much you have to be as exporting out of the country. So that's another sort of loan program that we can utilize. But no, there's no stipulation that you can't have business dealings elsewhere.
Awesome.
Can I
Okay, that's
interject something on the purchase of a new company? Sometimes with factoring, if you're purchasing a new company, we can use the AR of the new co to help with the purchase. So it's something to think about as well. If you're looking to acquire another staffing company, etc., we can help sometimes with that current AR from the new co.
That's a good point. Yep. I'm moving on to the other category now, which is, say, quite a few folks who joined today do represent IT staffing company. The question is about, can they get funding based on, number of employees or payroll credits? I don't know, like whether it's fall under SBA loan or not, but I'm like just curious to see, how does even like loan for this kind of staffing companies work?
I mean, you're going to have, it's the same as any industry. You're going to have, I mean, whatever they're seeking financing for, we have to have income, P&Ls and tax returns and balance sheets to confirm, revenue and expenses. So it doesn't really differ from any other industry that we're lending in.
Okay, that's good to know. Any other factors you think, that as a staffing company need to consider, like anything special?
No, I mean, it's going to be like, I would make sure, or we would be more apt to lend, I should say, if they're strong personally in their experience, their personal balance sheets, because there's going to be a lack of collateral in a staffing company unless they, own their building.
Okay. How about like any business size matters in terms of like what the loan they are seeking? No, it's a regular. Okay.
Yeah, we're basing it on the cash flow of the business. So if the business can cash flow the loan payment, that's all we're looking at.
Okay, awesome. Now switching the category. So going back into this traditional businesses, with the same example you were mentioning, like Cold Stone, franchisee, and things like that, right?
Mm-hmm.
So there are quite a few folks who asked if they are looking into these kind of small, less than million, or some cases less than $500,000 type of franchise business. There, when they are approaching these loans, is it more of a personal, credit worthiness, or like what do you?
Yeah, no, it's the same. It's the same as, a $100,000 loan to a $5 million loan. It matters what your experience is, how strong the franchise is, what kind of training you're going to get, what your personal balance sheet looks like, what your collateral position is. But I would say if you're doing a franchise, and it's a strong franchise with a good history with the SBA, meaning there's not a lot of charge-offs or defaults, then our credit guidelines are a little more lenient. So maybe you can get by with no collateral or only having the 10% to inject. So, and what I would say is if you want to talk about anything, you've got my contact information is here. You can reach out to me and I'm happy to go over anything with you. You can run anything by me.
Okay, awesome. How about like any closing cost related stuff, Whitney? Do they vary based on type of the business, loan amount? Like,
Yeah,
how
so
do you handle that?
it's gonna vary based on the type of the loan, but always standard are legal fees for our attorney to draw up SBA documents. They review all contracts. They review your lease for SBA compliance. They review your purchase agreement for SBA compliance. So they're reviewing everything. If there's a building that we are financing, of course, there's going to be an appraisal. We also have to get an environmental study completed to make sure it's not contaminated. If there's construction, then we have to get a third-party monitoring company involved who's going to oversee the entire process to make sure that what the contractor is actually saying they've done has been done, and then we release funds. So it's just going to vary based on what the project is. But if we're talking about just a standard business acquisition or startup, I would say your closing costs are going to be around 10 to 15,000. And again, that's worked into the loan itself and not due at closing.
I see. Awesome. We are right at time, but what I'm gonna do is like I have all your contact details and deck. Although there are like over 120 people joined till now, there was like on and off flow. But I'm gonna circulate all of these details to more people. There are even like close to 3,000 folks that are in there. I'm gonna circulate those details via email. But as a final thought, if you guys want to take a moment to, share anything, how they should approach you, where they can find you, feel free to do it. So
for me, email, my mobile phone is my work mobile. So you can, email, call, text me any time of the day, and it's not going to bother me. But yeah, reach out to go over anything. I'm happy to, it doesn't take too long to run something by me and me to get my thoughts. And I'm always available.
Awesome. That's great, Whitney. How about you, Anne?
Same here. Please reach out with any other questions. We can move pretty quickly. There's not a little versus the SBA. There's not a lot of pre-work, just what you have if you're already in business or a startup. So run both scenarios. If it doesn't work with SBA, please give me a shout and maybe we could do something on the factoring side. And again, thank you for having us. It was great to spend Sunday morning with you guys.
Awesome. Yeah. Likewise, the session, I would say like a great success. As a presenters, you delivered information, engaging presentation, covering key topics, addressing like important questions. This discussion was like super productive. And I see audience were also like fully engaged. Many thanks to our presenters, both Whitney and sharing your experts and insights to the audience for their active participation also. This is a super positive outcome. Well done, everyone. Thanks again to our presenters and their valuable contributions. And I'll be sharing your details over email. Thank you again. Happy Sunday.
Thank
Bye.
you guys.
Okay,
Bye.
Bye-bye.
Thank you.